on to the vol side. So crypto markets obviously have calmed down a little bit over the last week. BTC realized vol dropping, I wouldn't say off a cliff, but dropping considerably, right? It got into the 80s. That's this yellow line, dropping down back towards around 60. We've also had, obviously that was after the 29K resistance rate area was rejected, and we kind of fell back into a 27K kind of range. Realized vol on Ethereum also coming down, but actually managing to be slightly above BTC on a 10-day basis. So kind of getting back its dominance in terms of realized vol. Implied vol is also converging. So you can see really it looks like realized has converged to implies, but implies were already priced for markets to settle down a bit. And that is what happened. So you now see all these pretty much equal, which means your carry is near zero across both assets. We do suspect that realized vol will continue to head lower. So those yellow lines are probably going to intersect and actually keep going lower and below the implieds. Once we get past month end, and then we would think that there's going to be some positive carry coming back as we head into Easter. Markets might find a bit of a range, but I don't think they're going to let implied vols absolutely get crushed. So they will hold some sort of risk premium given what's occurred, especially if we start to sniff back to the upside and we threaten the upside resistance levels. I would say, wait for crypto markets to establish their range into month end, let this big expiry pass on Friday. And then if there is a bit more positive carry back into the vol, then it might be worth trying to harvest some of that going into Easter. We suspected that 29K resistance would fail on the first test. But if and when that does break to the upside, we do think that's going to drive vol higher, as technically, like we said, that opens up a lot more upside. And so, we think that spot up, vol up dynamic is going to persist in crypto space, like it has done in previous years. Okay, looking at term structure, both BTC and ETH term structure flattening back down to a kind of a flat line now from inverted. So you can see these moves here coming down there to the green. The vol spread has shifted higher. So obviously that vol spread got absolutely crushed on the BTC move last week, but it has come back. It's still not really where it would typically live, but it certainly has shifted higher up to around a couple of vols. That's primarily just due to BTC short-dated vols coming down harder. Now, we were concerned that a break of 29K would trigger more BTC outperformance. And as that level did fail to break, then vols are mean reverting. And that's why the spread is kind of heading back to where it should be. So we saw it got below zero. It's bouncing. We still think it could easily go 5 to 10 vols again in short order. So for now, we haven't changed our position in our September strangles, long ETH, short Bitcoin. We had said if we broke 29K, we wouldn't be stubborn and we would definitely trim the delta at the very least, but probably trim some of the Vegas spread as well. We didn't need to do that because it came back our way. And for now, we're sitting tight on it. Now, the positioning setup still suggests that BTC is shorter gamma than ETH, which is going to make it hard for ETH realize to outperform meaningfully unless we get a good fundamental reason in the near term. If Shanghai provides that, we'll see. Not massively convinced it will, but yeah, right now positioning in ETH doesn't really support that it's going to suddenly realize loads in the near term relative to Bitcoin. Looking at SKEW did recover for the puts as the market turned south and the breakout hopes died down. Huge amount of call volumes had traded. Remember, we had a record week before last to play the upside break, get leverage to the move. But with spot and vol both trading lower, much of that call premium has evaporated. Okay, even though the calls weren't necessarily dumped back onto the street, the fact that we've gone out of the money and vols have come down, those options have just declined in value massively. Short-dated SKEW has repriced the most, so that's been flipping back into put premium. See these lines jumping back above the axes. So weekly BTC options getting into a put premium again, but it does get progressively higher for calls as you move out the term structure in Bitcoin. So the long end still does firmly trade for calls. If we look at the Ethereum SKEW, on the other hand, it's almost fully back to put premium across the whole curve, whereas the longest maturity still holds a very slight call bid, but all other sort of shorter dated maturities are still in puts. Weekly Ethereum SKEW back to 3 vols for puts, as short-term hedges obviously are feature there when markets are coming off. There seems to be a sense in crypto vol markets, though, that over a longer time frame, the liquidity taps are going to be turned fully back on. And so the upside tail is the one you want to own longer term. That's why these upside calls are still at a premium on the 6-month maturities and longer, whether you're looking at BTC or Ethereum, right? So I think that's the reason. The reasoning is people are saying that upside tail could be very, very valuable longer term when we've got the pivot, we've got the liquidity turning around, and that's what people are pricing right now. Okay, now if we go, nothing really to say on the individual dashboards. We're kind of near the middle zone on BTC, and we're kind of in buy vol territory still on ETH, which kind of lines up with why we are long that vol spread, because we think ETH offers better value Vega than BTC does right now. Moving on to the flows, it was a healthy week of volumes on BTC, about $5 billion notional trading. We've got $3.5 billion expiry this week in terms of notionals of the options that expire. Markets did fail to break higher, as we said. We saw some profit taking on March calls, 28K strike, and June 27K calls. So we see that here, these sort of strikes here getting taken profit on. And then basically, we did see some dip buying come in on the short dates as well. So as vol and spot sold off, some of these calls in the 29K, 30K area, very short dated, 31st of March. So this Friday also got bought. The larger clip went up in a call calendar. 7th of April, 31K calls versus 28th of April, 40K call calendar. That was sold. Someone buying the short dated calls to sell the higher, longer dated calls. And then we saw some more Vegas selling as well in December expiry. So all the way to year end on the 45K and the 50K calls, obviously locking in those implied vol levels, selling Vega out to the end of the year. And then finally saw some isolated activity there in some 25K March puts, one of the few little bits of put buying that we saw as markets sold down. But generally, still predominantly bullish flows, people using the dip to buy. If we look at Ethereum, also seeing some flows on the bull side there, more than we've seen lately. $2 billion notional week. We've got $3 billion expiring. Remember, a lot of trades were done last year with March expiry for the merge and all that stuff. Those are all rolling off now. We're all miles out of the money, but it is still a big notional. If we look at the flows, upside focus, given that we're starting to see a little bit of relative strength. So 31st of March calls, whilst they got dumped, and you can see that by the yellow bars, these calls here got dumped in favor of bullish risk reversals, where they're buying in April the kind of 2,000 to 2,200 calls, and they're selling the 1,600 and the 1,700 puts in April. So that was your sort of biggest clip to play the long side. And then we also had some outright call buying in the May 24s and the September 25 area. Okay, so those are your bigger clips and what you're seeing in Ethereum flows. Okay, looking over at the gamma positioning, we can see that BTC dealer gamma is the most negative that we've seen in months. You can see this sharp drop here, according to the GEX model from our friends at Amberdata. The predominant strikes that are driving that are this Friday, 26, 27, and 28K strikes are all the local region. So the street feels like they're short here, which may well mean that we're going to be choppy into Friday's expiry with this much gamma. Now, probably do need some headlines and some catalysts to move the market around materially, but the positioning in the street is conducive to more movement when the street is this short gamma. Looking at Ethereum, though, positioning is slightly below neutral, but it's much closer to neutral. It's not really extreme in any way. So we would think, and we can see we've got the local strike here of 1,700, but we're along the wings against that. That's kind of neutralizing some of that gamma. So therefore, it's not as clear that ETH's going to have a big move between now and expiry. So if anything is going to get pinned into Friday, it's more likely to be ETH pinning than it is BTC, given the positioning setup right now. Okay, and again, like I say, that doesn't really help our relative value vol position, but that's why we parked in September, because it's more of a Vega trade than a gamma trade. Okay, looking at our activity, so crypto strategy. All right, that's it for today's crypto. I'll see you all next week, and I'll catch you tomorrow.